Ladies and gentlemen, the first panel for this evening is the role of TradFi in crypto. And we've got three amazing panelists. Please hold your applause to the end. Could we please welcome to the stage Mike Reed from Franklin Templeton, Simon Latorte from Canton Network, and Solomon Tesfaye from Aptos as well. So ladies and gentlemen, a round of applause for your panelists. Mike, we'll start with you, because just before I did say, oh, you're on the TradFi panel, and you got a bit offended.
Yeah, you weren't supposed to talk about that in this panel, but yeah, that did happen.
No, I mean...
no, I think, well, so truth be told, at Franklin Templeton, we build authentically on blockchain rails. Our ethos is very crypto in nature, like crypto native. A colleague of mine is here who jumped into one of our team chats a long time ago and just started saying the crypto gospel to us, and we hired him on. So this is in the DNA of our group. So we're definitely a traditional finance firm, but we have this arm that's completely authentic to the crypto ethos. That's why I kind of rustled a bit at what you said.
No, amazing. Look, following on from that as well, I think there's a whole narrative at the moment that Wall Street has arrived in crypto. I mean, I'd be keen to hear from each one of you. Do you agree with that, or are we still early? Where are we at right now?
I definitely think we're still... Do you want me to go first?
Yeah.
Okay. I definitely think we're still early. Our group, the first time I heard about Bitcoin 15 years ago, I was sitting on a fixed income trading floor, and my boss at the time came in, and he said my son was playing Call of Duty, and he won a tournament, and he won Bitcoin as a reward. What the hell is Bitcoin? And that started our journey of learning about blockchain technology and everything like that. So we've been in the space for a long time, started building in the late 20 teens, again, authentically ourselves with our own engineers and developers. And you know, we have a whole effort where we tokenize our own assets, again, authentically without an off-chain book of records, so the assets can move 24/7. We can do really cool things like one of our products has intraday yield, where yield accrual happens at the second. So if you send someone that asset at 2 in the morning on a Sunday, not only does it authentically become theirs at 2 in the morning, but they begin accruing yield for the day at 2 in the morning. So then, you know, at end of Sunday, when the airdrop of income occurs, one partner would get 2 hours of income, the other would get 22 hours of income. So things like that, again, I talked about crypto native when we were discussing things. We've been doing this for a very long time. However, I would say when we were a couple years into our journey, for those of us who've been in traditional finance, we're very fond of baseball analogies. So what inning are we in is something people ask. And at that time we said, we're not even out of the dugout yet. People aren't even warming up. It feels like we're in that phase now where people aren't just trying to learn and understand, but people are actually building actively, like traditional firms like ours. So pretty exciting time.
And how about you, Solomon? Where do you think we are at right now in the Wall Street crypto journey?
So to sound somewhat repetitive, but we're very, very early on. Just when you think of the money market fund that Mike highlighted, it's a rounding error relative to the total assets under management when you talk about Fidelity, let alone the global markets. And also, when you think of just RWAs holistically, 26 billion or so relative to just when you think about the public market scale, real estate, when you think about just the debt capital markets, it's just night and day in terms of contrasting the scale. So we're definitely at the early endings. And also, if you look at just set aside RWAs, if you look at stablecoin and you think about money movement, we move about 60 billion on a monthly basis of stablecoins on Aptos. But when you look at just cross-border transactions, we look at remittance, the scale is just tremendous. So it's very exciting times. And the growth, I've been in the space since 2018, the growth has definitely expedited in terms of it's more like a hockey stick at this point, but definitely it's at the tip of the iceberg.
And now, Simon, I'd be interested to hear from you. What is the biggest change that you've noticed over the past 12 to 18 months in how institutions are responding to crypto?
Yeah, and while I agree we're still very early, the situation today compared to 2 years, 5 years, 10 years ago is drastically different. So what's new with this institution is like, I think for years we've been working on the Canton side, initially with, I would say, the innovation lab, the blockchain team, maybe doing some kind of one-off tokenization. But over the past, 1, 2 years, it started to move to like the business as usual trading desk, particularly the collateral management desk, the prime brokerage desk. We have now started to do on Canton some tokenized treasury at the DTCC. So that's kind of a big revolution because now the day-to-day margining is moving on chain, and it's not the blockchain team, it's like the collateral team, and you tell them, yeah, it's going to be a few billion, a few trillions, and say, yeah, that's the kind of volume we're bringing on chain. So I saw that major change over the past year and a half. Same thing on the cash side, like using tokenized bank deposits is really moving out of the innovation lab into the day-to-day businesses.
And now, Mike, what do you think Wall Street still misunderstands about crypto?
I think in the beginning, when anyone starts in their crypto journey, Bitcoin is the same as Ethereum, is the same as Doge, is the same, like all of the assets are the same. And when you start to obviously unpack things, you learn that the chains are different, the costs are different, the processing power, like it's all just different. The assets are different. The projects that are being built on top of the protocols are all different. So I think there's still this perception out there at times that crypto assets are worthless and there's nothing backing them. But when you start to do your homework, you can start to figure out that there is a way to value the assets, put price targets on them, assemble portfolios and things like that. I think that's a huge misconception out there from some traditional Wall Street firms.
I guess following on from that, I'd be interested to hear from you, Solomon. What do you think the sectors of the crypto industry right now that are gaining the most attraction from the institutional side?
So initially, if you look back 5 years, it was really focused on like private markets, and people were trying to build liquidity on chain. Building liquidity is very difficult, first of all. I think now people are actually trying to bridge the gap between very liquid products, whether it be public equity, whether it be money market funds, whether it be DCM products that are also typically, when you think of like public markets, very, very liquid, and they're just trying to bridge the gap, and they're trying to use blockchain as the underlying infrastructure as opposed to creating liquidity. I do think that there's a huge opportunity to reduce friction when it comes to private markets, which is multiple times bigger than the public markets. But right now, I think you'll see a lot more of public equity come on chain over the next couple of years.
And how about yourself, Simon? Do you have anything to add to that?
Yeah, I see a lot of interest in kind of bringing the lending, borrowing of the Aave compound-like onto traditional finance. Like the lending markets in traditional finance is like RFQ streaming of trades. In Aave, in compound, it's more like a parametric curves that you define, and then it kind of trades all the time. And this change of mindset is starting to be something that I see some larger traditional player think about implementing, but not on crypto tokens, but on equities, US equities.
I guess moving on to the pain points and what's actually stopping from further adoption as well. What do you guys think is like the main pain points that we're seeing from further scaling within the institutional side? We'll start with you, Mark.
I think regulation has been a big change, and you're seeing, like I think the reason you're seeing a lot more crypto adoption in the United States, at least over the course of the last 12, 24 months, is it is a completely apolitical statement to say that the current administration in the U.S. is more favorable towards these technologies than the previous one. And so now you see a lot of traditional players who are a lot more confident engaging in the technology and engaging in building on it. So I think regulation is a huge thing. Things like crypto custody with SAB 121, like rules that used to be in place that have now been lifted, are kind of opening the floodgates for a lot of people to explore in a lot more meaningful way.
And Solomon, can you add anything to that? Maybe around the Clarity Act and everything that we're seeing there with the delays?
Yes, I think regulation has historically been the key blocker, and then to Mike's point, now there's a lot more line of sight to regulation depending on what jurisdiction you're in. But I also think that just fragmented liquidity, when you think of just putting assets on chain, is an issue. Right now, when you think of traditional markets, you have smart order routing and things along those lines to get best execution, which is just not the case as of now when it comes to putting any traditional financial products on chain. So I think that's something that needs to be bridged. And then also just the practicality of connecting blockchain to legacy infrastructure is also something that needs to be navigated. And then when you think of DeFi, that's a whole different set of issues in terms of understanding counterparty risk and AML, KYC, and things along those lines that need to be resolved as well, which we have a number of solutions for that we're working with different counterparties on, but that's some of the friction points that I see.
And Simon, do you see any other friction points aside from regulation that are stopping the scaling at the moment?
Yeah, I would say you have a few advanced players. Templeton, they run their wallet, validator node, or Citadel, they also have like advanced setup. But most of the asset managers rely on a custodian. And I agree, like SAB 121 is a big change. But think about which large custodian are live to accept tokenized asset. Not that many, if any. So to me, that's a major blocker. The setup regulatory-wise is there. The work has not yet been done to have traditional qualified custodian handling tokenized asset on a daily basis. So that, to me, is my priority for 2026.
Now, I think everyone in this room would agree that the crypto charts aren't looking great over the past few months. I don't think anyone's going to disagree with that. You know, from an institutional side, how much interest goes down? Is it still that way, or is it still market-driven to this way, or is it becoming more mature now where they understand that it is a market in itself, things go up and down, it is more volatile? We'll start with you, Mike, from Franklin Templeton's point of view.
I think there's two things to parse out here. One is on the investment side, and the other is on the building side. And I think people are just as passionate now about building as they were 6 months ago, a year ago. So I don't think that's changed. On the market side, obviously, like, you know, when prices are high, people get excited, and when they're under distress, people get nervous. But I think there's really several different investor profiles out there. There's someone like my 15-year-old son, Kyle, who thinks Bitcoin is cool. There's someone like a 30-year-old friend of mine who has 100% of his investments in crypto, because his thought is if it goes to zero, he can just start over again. There's someone like me, where our family is probably at any point in time 5 to 10% in crypto, which a lot of people would say is outside of the industry would say is pretty robust. People in crypto might say it's a little bit light, but I care about paying my mortgage payment on time and keeping my kids' 529 plans funded more than I do about return at this point. So I have stability of cash flow needs, and then there's people like, you know, my dad, who's still trying to figure out what a Bitcoin is and can he use it to buy a pack of gum. So all of those different investor types think about things differently, but I think what you're going to see happen universally is over time, everyone will mature. All these crypto investors, including myself, people mature to that phase of life where they need stability of cash flows, and our general thesis is that there's not going to be a huge dump on the crypto market as a result of that. It's going to be just an evolution of those investors looking at complete financial picture planning and things like that instead.
And Solomon, do you agree with that? Do you agree that interest does still hold up when market conditions are less favorable?
Well, I always agree with Mike. He's an investor in Aptos.
Okay. So you have to agree
and a partner of Aptos. We have the money market fund on Aptos. But of course, interest wanes on from an investor perspective. But setting aside that, on the institutional side, ones that are actually trying to build on-chain and solve problems that putting assets on chain do solve, whether it's instant settlement or any other like programmable assets, that doesn't change because they still want to build alongside us. Of course, they want to do reverse due diligence to make sure that also you as a player in the space are well capitalized so you don't go out of business if they invest all these dollars in terms of co-building with you. But setting that aside, if you actually are trying to really basically reconstruct their actual back-end infrastructure, that doesn't shift with just price movement.
And Simon, I'd love to hear from you what your perspective is on how institutions are acting in a bear market, essentially.
Yeah, so many of the players that are on Canton are not speculating on crypto tokens. And so, of course, we have a beta, like everybody. When the crypto market is up, there's renewed interest. But in the recent bear market, Canton Coin actually did pretty well compared to everybody. And I'll be a little contrarian, is that when market is down, it kind of filter out the crappy projects. And I think for the whole industry, I prefer when there's quality versus quantity. So I don't mind the current environment at all, to be honest.
Where's the biggest potential revenue opportunity right now in crypto, Mike?
Oh boy, that's a big.
It's a tough question.
Well, you know what I'm sitting here and I just keep thinking about, so these are two, we're live on 10 blockchains, and we're live with both of these partners. The thing that keeps running through my head as I'm sitting here, this has nothing to do with the question you just asked, so I apologize in advance, is, can I ask a question? Is that okay?
Yeah.
I'm so sorry, this is so rude, but, and I'm Canadian, I'm supposed to be really polite. The debate between public and private blockchains is something both of you live in all the time, and we live in it all the time with investors. Some of our investors really care, some don't. How do you guys feel about the state of play in the public? I obviously know what side of the argument you're both going to land on, but like maybe could you talk a little bit through that discussion about the state of play for public versus private blockchains?
Yeah. So, I don't know if you all know, but Canton is kind of a hybrid in a sense that Canton, anyone can join, but if you want to know how much Benji on Canton I have, you can't. So Benji, Mike's team, decided to make Benji on Canton not visible, not transparent to everybody. Canton Coin is on Canton. There's a Canton Coin Explorer. You can see every trade of Canton Coin. So you can decide what type of transparency you do on Canton, meaning it's an open, in that sense, public blockchain with customized visibility. So we're trying to be a hybrid and hopefully kind of the best of both worlds. More TradFi player tend to be very private. More crypto DeFi player don't mind being more transparent.
So this is a great question. So when we talk to different regulated entities, of course, early on when they were looking at like POCs, pilots, and so forth, they were really trying to have a lot of controls in place, and they were leaning definitely toward more private chains. I do think there's a world where both exist. A lot of the conversations over the last couple of years have been more so around public permissioned, where they want to have the benefits of a permission network where they can get the connectivity with the broader blockchain ecosystem, but at the same time, they want, of course, the controls in place. And so when you think of like Aptos, just for those less familiar with Aptos, it came from the Meta Libra DM days and it's spun out. So we're a move-based chain, move language-based chain. So we have high levels of security. We're institutional grade. You know, a lot of chains are trying to support the MasterCard level transactions. We could support all the credit card transactions in the world currently on chain. And so when you think of just, you know, confidential transactions is something that we offer, for example, from a privacy perspective. When it comes to any other like regulated activity, we offer about 1 billion of RWAs are currently on Aptos. Stablecoin movement, we have about 60 billion of volume over the last 30 days. So we already have a lot of regulated products. Of course, we leave it to the regulated entities to actually add on an additional application layer of security when I think of like AML, KYC, things along those lines. But now the reality is we already have a lot of regulated products that are already on a public blockchain.
You asked a question about revenue, and it just made me think about the two distinct, didn't you?
Yeah, 100%. No, it was great. I loved it.
Well, it made me think of the various client bases that we deal with. We deal with crypto native, crypto players, and we deal with traditional institutions, and bringing both of those groups towards the middle is something that we do on a daily basis. So again, I'm sorry, I didn't mean to steal your panel. I was just curious about how these guys...
You didn't steal it at all. But I think the audience would love to know...
What's your answer to your own question?
No, you didn't steal it at all. That was great. I guess wrapping up now, I would love to hear from each one of you with a pro-crypto stance under the Trump administration right now. How much of the momentum that we have been seeing do you think is policy-driven?
Maybe I'll start from a building standpoint. I would say quite a bit of it. Even at this conference and various conferences I've been to over the course of the last several months, a year ago, those same conferences were maybe proof of concepts and people thinking about what they may or may not do, and a lot of like really light conversations. And now there's not just proof of concepts, there's people actually in market with product ready to go or very close to it. I think about, you know, a lot of the largest global, a lot of banks are exploring depository tokens and not exploring, developing depository tokens and things like that. So I think a lot of it, that momentum has been caused by changes in regulation.
And Simon and Solomon?
Yeah, no, this is major change. Like 2 years ago, my project would stay in legal compliance box, you know, for like 6 months, pending answer from regulator XYZ in the US. Now, recently, oh yeah, we notified FINRA, we got to go in a week. So my clients say that. So it's kind of night and day. So yeah, it does make a big difference in the speed to go from concept to production.
Yes, it's going to sound repetitive, but from a regulation perspective, any type of regulatory clarity acts as a catalyst for institutional participation. So in general, it's always going to be POC pilot in absence of that line of sight, and really, especially if it's a regulated entity, so it's definitely helped our conversations. And also, it's helped also our travel for those that are in the U.S. because we would spend a lot of our time overseas because there was no clarity, pun intended, in the U.S. and so it's helped with those conversations.
Amazing. Thanks, Solomon, and thank you very much to our panelists as well. How about a massive round of applause for Mike, Simon, and Solomon?